Hi everyone, welcome to this podcast powered by The Big Whale, the media with its mission bridging the gap between the crypto space and the traditional world, and ultimately building trust in a still too often trustless world. And one of the hottest topics to bridge this gap is lending and borrowing, which The Big Whale is dedicating a special report this week. And to discuss about this, I'm very pleased to host you, Paul Frambot. You are currently the CEO of Morpho Labs, was launched the Morpho protocol. So before it was the Morpho Blue, if I'm right. So how are you doing, Paul? First to start.
Yeah, I'm great. Thank you. Thanks for having me.
So just to go into the start to all of this, why lending and borrowing, Paul, on a public blockchain are more interesting compared of the rail of the traditional world, you know,
Sure.
on a public
Um,
blockchain, I mean, of course.
well, if you think about lending and borrowing, it's really about bringing together two kind of users. You have users that have an excess of capital and want to generate interest on it, and you have users that have a need for financing, right? And so optimally, there is one algorithm that is going to perform the matching between every lender and every borrower, and is going to have like the most optimal, the most efficient matching of those both parties, right? And obviously, having a shared infrastructure, which would be in the public blockchain to operate that, is necessary if you want to aggregate like all the inflows, all the actors of the entire world, so regardless of their regulation, regardless of who they are. It's important to have one common and opinionated, credibly neutral settlement layer where everything is going to happen. You know, for different reasons, but the main reason being purely just efficiency, right? You want one single place where everything is going to aggregate, where everything is going to settle, right? And by aggregating, you unlock more efficiency, etc. Obviously, the other interesting aspect of it is the accessibility, right? Like how do you allow people to build on top of those infrastructures in a way that's super, super easy? Currently, if you want to build a lending and borrowing business, it's very hard, outside of the blockchain world. Just on the infrastructure side of things, like technically it's super, super hard. And Ethereum provides like a very accessible way of developing on those like lending and borrowing primitives.
Okay.
Yeah, and finally, I'd say like the last one, efficiency, accessibility is obviously resiliency. Like it's not super clear right now because like over the last 3-4 years, we had a lot of like different exploits in DeFi, but theoretically, in the long term, having a piece of code that's completely open, massively audited, formally verified, is the way to go, and it's much more resilient than relying on one single site server that can be shut down at any point in time, right? So having a software that's completely open and that is decentralized, like that is run in a decentralized way, gives you like liveness and security properties that you can't have in the traditional financial world.
So, what have been your logic, when you start to think about Morpho? Because before it was not the same protocol; it was an aggregator of yield. So, what has been your logic for the couple past months when you launch and when you operate and develop Morpho?
Sure. So we've always wanted to do lending and borrowing, right? And the big question was like, okay, how do we break into this market? We had a very like entrepreneurial approach, which is like, what's the best way to go to market? And at the time, the leading player was Aave, very large lending and borrowing protocol on Ethereum, and we just noticed that they had a very big gap between their lending and their borrowing rate due to like the inefficiencies of the protocol. And so what we essentially did is like optimize for that gap. So we built like some kind of aggregators of intents that essentially enable better rates than Aave while preserving the same liquidity and the same risk management. And we built this protocol in 2022, deployed it. It grew very fast at a time where DeFi was completely dead. I went to like probably $2 billion of deposits, something like this. So becoming itself a very, very large lending protocol, to the point where, it was being a bit systemic to Aave, right? Like the size of Morpho compared to the size of Aave was like asking questions. Like people were asking us, how is this going to end up? Are we going to represent the total size of Aave? And so we decided that, we've sort of capped our market. Like we could not grow much bigger because the limit was Aave itself, right? We were built on top of them. And so it had become clear that we needed to, move away from Aave to build our own lending and borrowing protocol that's completely independent, that's completely new. That is the current Morpho version today that we like to call Morpho Blue, but you can think of it as the true Morpho V1. Which is the one we're building on top. We're building on right now, and that has been released like a few months ago, and today is already close to $2 billion of TVL already.
Okay, so just for me, if you are doing the history of lending and borrowing on DeFi, there is Compound, with the liquidity mining. There is Aave, and now there is Morpho. So can you explain some differences or the difference between Aave and Morpho? Because, my point of view, many people, including our subscribers sometimes, still haven't fully understood of Morpho is built and therefore how to benefit from it compared to other solutions like I mentioned it, Aave.
Aave is a bank. Aave is a fund, right? Like, you deposit money in Aave, and Aave is going to manage it. They manage the risk, they manage the code. They change the code from time to time. Last week, they upgraded all the Aave instances. And they manage the risk. So like they manage thousands and thousands of risk parameters on a daily basis, not automated, like, they have to, off chain, like do the computation and update them in the protocol. So really it's a broker, but decentralized, and you sort of like trust them with your money. Morpho is an infrastructure for banks, right? Instead of being a bank in itself. Morpho does not have a canonical like yield solution. We're just providing the tooling for anyone to build the lending, and borrowing use case that they want, right? And like you could have people rebuilding things similar to the Aave v3 protocol. You could have things similar to the Compound v3 protocol, etc., and anyone can build the things they want, right? And so think of it this way: Morpho is not a product; it's an infrastructure on top of which people like Gauntlet, like Stakehouse, etc., they can build those products that are competing with Aave, right? So Morpho is much closer to Uniswap than it is to an Aave. Like the core is completely immutable; it's completely permissionless and decentralized. Anyone can create the lending and borrowing use case they want. With the compliance they want, with the risk they want. And then on top of that, you have the Morpho vaults that are run by, risk creators like, Gauntlet, Stakehouse that offer a similar experience to Aave. So the user, at the end of the day, when you go to the Morpho website, you have a much wider range of offering than you have on Aave, from much lower risk to much higher risk as well, if you want higher risk, different compliance profiles, if you want different compliance profiles, etc., etc.
Okay, so what you are saying that, okay, I have some assets and I want to know who is managing the risk, for example. That is not completely possible or transparent as Morpho in Aave. That's what you are saying. And can you just, I would say, summarize for us in a simple way how the infrastructure of Morpho is working, with the base, I would say, with the vault and with the risk management on top of all of this, or
Sure.
in the vault?
Morpho has two main components: the markets and the vaults, right? So Morpho market is really a Uniswap pair, but for lending. It's like one collateral asset, one loan asset, one oracle, and one liquidation loan to value, which is a risk parameter. And we have hundreds and hundreds of those. Some of them are, like BTC to borrow USDC, or ETH to borrow USDC, or STEs to borrow USDT, etc., or Shiba to borrow like ETH. Those kind of things could be really anything. There is also a bunch of scams, right? Like markets like on Uniswap, you have a bunch of pairs that are that you should not touch, right? And obviously, if you're an end user, you don't want hundreds and hundreds of markets. You don't want to be choosing across like all of them. You don't want to be doing your own risk management, right? And so those markets that are completely immutable and completely ungoverned, you can think of them as micro primitives that are going to be reaggregated in vaults. Vaults are going to do the curation. Okay, so Morpho markets, just lending and borrowing, no risk management, completely immutable, hard to use as it is, but super efficient and completely trustless from a code perspective. And because it's hard.
And Paul, sorry, and Paul, to manage the liquidity. So for right now, it's more, I would say, simple to manage the liquidity, as you mentioned before.
Yes, so liquidity and interest accounting is all done in a completely programmatic way at the market level, right? But as a user, it's hard to choose which market I'm going to use. I'm going to lend you. Am I going to lend USDC against BTC, against STEs? I don't want to choose those things. This is why we have the second layer, which is Morpho vaults, right? And Morpho vaults can be run also by anyone. They're completely decentralized, like code. And anyone can come and deploy a vault. So it could be, a crypto native risk trader like Gauntlet, but it could also be a fintech. It could be an exchange. It could be anyone that want to build like an earn solution, a yield solution. They can, deploy a vault and start doing risk management, risk curation for their users, right? Some are DAOs, some are algorithms, some are like, risk management companies. Could be, a wide range. And so when you interact with a Morpho vault, this is no different from an experience perspective than an Aave. You just lend your USDC and wait.
Yes.
That's it. Then the vault is going to do the management at the market level, which is hard to use in itself, right? This is where you have some kind of like proxy to interact with the market. Right. It's a bit similar to Uniswap, right? Like LPing on Uniswap is very hard. Like if you do it on your own at the market level, you probably lose money. So usually what you do is that you lend to people that, are going to do it at the market level. And because we have those complex players interacting with the Morpho protocol, we can afford more complexity. We can afford, more expressivity at the primitive level, which other players are not able to.
Okay, but what was your logic when you think about Morpho? Because it's like, for me, Morpho is more adapt for traditional player when they're gonna coming in DeFi. Maybe I don't know when, but maybe in a couple of years or as soon as possible, we will see. So for me, in your vault, if I'm a bank, for example, I'm able to launch a vault with my parameters, my liquidity, my player around this vault. Is it correct to say that? And it's not necessarily possible in a short term to do this with Aave with the same transparency about the management and the risk about the market or the asset I'm going to borrow or I'm going to lend.
Well, here's the thing. On Aave control manages. On Morpho, anyone can manage. That's the thing, right? So maybe it's a very black box algorithm that's going to manage a Morpho vault, or maybe it's a completely open source one. Maybe it's a French compliant vault. Maybe it's a US compliant vault. Like we don't make assumption on how the management is going to be done. So the way you should think about Aave versus Morpho is that Aave is in control of everything. Like the human beings, behind the Aave, they manage the risk, they manage the code, etc. On Morpho, the team of Morpho can die tomorrow. The protocol still runs by itself. Like this is really not the case in other lending solutions, right? And instead, people come with their own compliance and risk management, right? And so if you're an institution, you want to use Aave, you can't, right? Because like there is a bunch of like regulatory constraints for you, and it's very hard to do so. However, what you can do is use the Morpho stack to build your own lending use case that's going to be gated with the right like KYC or doesn't have to be KYC. It could be like any form of condition to use the Morpho vaults essentially.
Okay, but are you not afraid by given your structure, I would say your infrastructure, are you not afraid about the fragmentation of liquidity in case of the Morpho? Because as we mentioned before, it's for now it's better to manage the liquidity on Aave than on Morpho.
Well, that's factually not true. Like
Okay.
on Morpho, markets do fragment liquidity. Like each market has its own pot of liquidity.
Yes.
But the thing is that vaults are reaggregating all this liquidity, both on the lender side and on the borrower side with a contract called the public allocator. It's a bit technical, so I won't get into the details. But essentially, think of it this way. Morpho offers a lot of granularity and then reaggregates, right? And so as a lender, you're experiencing the same and even better liquidity. I'll go into why better in a moment, but at a first glance, if you're supplying on a vault that, let's say is the Gauntlet vault that supplies into 10 markets, well,
Okay.
those 10 markets are reaggregated as if they were behaving as one, right? And this is something, like usually competitors, trying to talk about Morpho in a bad way, they try to say, oh, Morpho fragments liquidity a bunch. In practice, not at all. Like Morpho is as liquid as an Aave because it reaggregates. Same on the borrower side. And it's actually more interesting than that because not only do you have the Gauntlet vault that could do also the something similar to Aave, but you would also have the Stakehouse vault, right?
Mm-hmm.
And those two vaults, they express different risk profiles, but they could share some liquidity with one another, right? So for example, Stakehouse, they do some real world assets and some crypto native lending, and Gauntlet, they do only crypto native collateral, right? So a bit of their liquidity, like a bit of their risk profile sort of overlaps, right? And in Morpho, if your risk profile overlaps, you're sharing markets. And so you're sharing liquidity to the extent that you share risk. That's a bit of an advanced concept, but that's very crucial in Morpho that, there is the idea that not only do you reaggregate liquidity, but you also share liquidity with other players that are not you, right? It's as if two Aave forks would share liquidity if they have some collateral in common. That's the same mechanism.
Okay, but how we can be sure that there is no aggregation of liquidity between Stakehouse liquidity and the Gauntlet liquidity in some cases,
Right. So, in some cases, they could be completely isolated. For example, Maker has their own vault on Morpho, and
Yes.
they're completely isolated. In Morpho lands, they're using separate markets than any other. However, in the Stakehouse and Gauntlet vault, I think both of them list WSTEs as collateral.
Yes.
So what that means is that USDC is being deposited in the STEs USDC market from the Stakehouse vault, but also from the Gauntlet vault, right? And so Stakehouse benefits from the liquidity that is being deposited by Gauntlet and vice versa, right? Which is a concept that does not exist in any other like lending and borrowing platform.
Yeah, I would say on Aave, it's a little bit the case with the isolated markets because they are talking, they launch some isolated market with Gnosis, for example, in EtherFi recently for the card or some stuff like that. Yeah, maybe for this, I will check. But why didn't you do it with them, and would it possible to do with you? And are you not afraid because they are able to doing a little bit the same thing as you, with the isolated market?
Right. So, 6 months ago, Aave was against deploying any other Aave instances. It was one size fits all, pool that would
Yes.
aggregate all the liquidity. That was their thesis, etc. Then Morpho started gaining a lot of market shares, and so they started like spinning off like other instances, right? Which is something they said they would never do some time ago. And so now they have all those different Aave markets that they're spinning off, to try to compete. The thing is that each vault, like each Aave instance, has completely segregated liquidity, right? If, for example, we were to do like EtherFi was to do like a USDC vault on Morpho, maybe it would share liquidity with the Gauntlet vault. Say Gauntlet is doing something that's closer to the main Aave v3 instance, and EtherFi is doing something with Gnosis on a separate instance. On Morpho, they do share liquidity with the main Gauntlet vault. In Aave, it's completely segregated, two different protocols, like there's nothing in common, right? So that's the main thing. Now, on why they went with Aave and not others, frankly, I have no idea. Like, we're not talking about with Gnosis and EtherFi, at this stage. So I had no idea they were, planning to do that. Usually, when there is a player that is, talking to both of us, I can't speak publicly for the most of it, but
You can. It's just between us, Paul.
No, but like I can't think of a time where we lost against Aave for closing a specific party. But if we're not in the loop, it's a bit the same thing with like the Trump protocol that is being launched. Like we had no idea this was going on. So of course, Like they launch it, but it's not as if they were like we were competing with one another and we had the chance to present what Morpho is doing. Like Aave has the strongest brand. They have been here for 8 years now. Morpho has only been here for 3 years. So maybe the Trump team, they did not know about Morpho at all, right?
Okay. And what kind of actor are you targeting right now? What kind of player are you in talk with? I mean,
Right.
traditional, of course, or more institutional, but more traditional. It's more exciting from my perspective.
Right. So the main thing is on Morpho. If you build on Morpho, you own what's happening. You own the code and you own the risk management. Like you own the code because the code is immutable. Like we don't control it, we can't change it, etc. It's not the case if you deposit on Aave, right? Like maybe the code is going to change, like last week, for example. Same
But
for risk
Paul,
management.
sorry, I cut you because normally on Aave, if you want to change the code, there is a DAO proposition. So it's like
You have a 7 days notice period. Like just to give you an idea, we have we have Morpho Optimizer, which is a protocol built on top of Aave, which still has like 600 million, right?
Yes.
The protocol is very it's a very complex protocol built on top of Aave. When we perform an upgrade, like on Morpho Optimizer, the main Morpho protocol is completely immutable. It's not upgradable, but the old one is upgradable. When we do an upgrade, we have to audit multiple times, in order to make this happen. It takes several months. It's the order of like 4 months if you want to complete an upgrade completely, right? What usually Aave does is gives you the vote goes through with the code only revealed like a week before, and so you have a week to look into how the Aave code is going to change and change your protocol in consequence and have your protocol audited multiple times, etc. This is the reason there is not a single serious institution that's going to build on top of Aave, because it's extremely dangerous, right? Like to think that they could Aave does not check the thousands of protocols that are being built on top of them to see if there is like a breaking change, or if they were like critically reliant on one specific line of code that they're going to upgrade, right? And yes, of course, there is a vote, it's public, but it's just last minute, right? And so securing a protocol, going seriously about securing a protocol takes several months at least, right? And multiple audits. And 1 week is not even close to be enough, right?
Okay. And sorry, I cut you. Yeah.
No worries. And so for that reason, if you're building on Aave, you don't own the code. It's controlled and it can be updated. You don't own the risk management, right? It's being, also controlled by Aave token holders that have their service providers, that have black box algorithms, blah, blah, blah. On the Morpho stack, you own everything. Like if you're an institution, if you're a fintech, if you're an exchange, if you're a traditional finance player, you come to the Morpho protocol and you can deploy the vault you want, the markets you want, and you are owning completely. You don't have to trust me, you don't have to know me, you don't have to, which is not the case, right? In other lending and borrowing platforms, right? And this is the most important thing for institutions is they don't want to give up control to some random set of token holders that they don't know anything about, right? And also, this is what Ethereum is meant to be, like permissionless and decentralized infrastructure. If you're not permissionless, if you're not decentralized, you don't inherit from the basic properties of Ethereum, then it becomes very hard to address builders. You can address retail users, easily. And so does Morpho, with the different vaults. But if you want to address the real market, of all the builders that are going to, build the best tools for the mass retail adoption, you need to respect decentralization and permissionlessness. And somehow so few protocols actually respect that. Uniswap is the only one with Morpho, I believe, that I'm aware of that truly respects permissionlessness and decentralization in the way Ethereum, actually promotes it.
Okay. And what it was my question before my cutting, I would say. What kind of player are you in talk with? For one more time, it's my opinion. There is some player I will say a fintech bank or like Revolut, some player like that, they will be interested to give access to Morpho to earn some yield, from stablecoin and some stuff like that, or in a very simple way, just give access to for corporates, for their treasuries or some stuff like that. So, what kind of player do we in talk with currently?
Yeah, so I can't share, like which
Uh,
player we're talking like in
Once
that
again, it's
position.
just between us, so you can.
Yeah.
Okay. No more the joke. It's
But
fine.
I will say though, that it's become very clear that over the last 2-3 years, many fintechs and centralized exchanges have built the necessary account infrastructure. So what I mean by account infrastructure is like account abstraction tooling, like smart wallets or paymasters in order to abstract gas, or layer twos, partnering with layer twos or building layer twos themselves, building stable coins, etc. They are assembling all of them, the basic primitives that are required in order to interact with a DeFi protocol, right? And so, if you're a fintech, you're very good at distribution, but you're not good at manufacture, right? You don't, like there is always this thing that image that I use, which is like, usually good businesses have manufacture and distribution, like you create cars and you distribute cars. Fintechs only have distribution. They don't manufacture financial services. They rely on, traditional financial institutions in order to make this happen. And, the way for them to escape, and actually own the financial infrastructure is not to use traditional finance. It's not to build traditional financial infrastructures. It's very, very hard to get into this world, but they can actually use DeFi to own their own financial infrastructure. Right?
Okay. But for this, from my perspective, you are the protocol for institutional player, and Aave is more focused on retail. So
We
there
are
is
the
a
protocol
bottleneck.
for everything. We're the
Okay.
protocol for everything. Morpho is the infrastructure. You could build institutional use cases. You could build retail use cases. You can build anything you want, right? That's the general idea.
Okay. And is it because it's not you reach 1.5 billion TVL right now around this? Is it a good way to use a TVL to describe the growth of a protocol still right now?
It's a good question. It's hard to say, frankly. It's I don't. We don't really like. We believe we're still like DeFi is still in some kind of echo chamber where we're recycling and targeting like the same users again and again and again, and 80 users are making for most of the volume and deposits in DeFi. So it's not so interesting, currently what's happening. So we're not too much metrics focused. Yes, we have those big numbers of like billions in deposits. I don't know if we should say total deposits, if we should say TVL, if we should say whatever. Because we're still like very, in any case, addressing, in my opinion, not the right market yet. But it's gonna take time. It's just like.
Yes. Okay. I have like maybe a technical question. Um, Currently, why is a collateral not remunerated when you borrowing on Morpho, unlike Aave? Because on Aave you supply, you get some rewards, you earn some yield, and after you can borrow some asset against this collateral. But on Morpho, it's not the case. It's you can supply, you earn, but when you want to borrow, you have to supply to borrow against this asset. So when will this solution be implemented to upgrade about of this, and what is the logic why it's not possible to do the same on Morpho like on Aave about this?
So first, it is completely possible to do the exact same that on Aave. I will say that, usually when you earn some yield, it's not free, that you're taking additional risk, right? Like, so
Yes.
if you're supplying collateral to borrow and you getting some, your intent was to finance yourself and get some USDC by borrowing, but your collateral is yielding, is because your collateral is under risk. It's like it's being borrowed. Like we like to say that it's rehypothecated. And on Morpho, we simply just let the market creators decide what is the collateral. Should it be an idle asset? Should it be a rehypothecated asset, right? An asset that itself is being lent out, right? The risk being, that if the collateral asset is rehypothecated and it
Yes.
becomes illiquid, right? Liquidations can't happen, right? And especially in the case of Aave, the protocol could go bankrupt just because of that, right? Like because of high utilizations of the capital, etc. And so on Morpho, we let people decide what they want to build, right? Like if they want to build a use case where the collateral is ETH idle, frankly, I believe that's too conservative, and I don't think it would get too much traction if you deposit ETH, it does not get you anything to borrow USDC.
Yes.
But it has, some people have asked us, like literally they want non-rehypothecated ETH to borrow USDC, and they don't care about the yield, right? And they can do it on Morpho, fine enough. My personal risk profile is that I wish I had like more ETH yield. And so, you could use STETH as collateral. You could use AETH as collateral, like the Aave ETH as collateral. You could use like a Vault or a wrapped version of a Vault as collateral, etc. So, like that's again like an argument used by some of our competitors that Morpho does not have native rehypothecation, meaning that the Morpho DAO does not control rehypothecation. That is true. We don't wish to. It's just like up to the vault managers to select if their markets, have rehypothecated collateral, right?
Okay.
Which is much more risk.
But
it's not free.
can we imagine in the future an implementation like that? Okay, you're gonna tell me that the curator or some people gonna operate a vault. They're gonna decide. So
Yes, exactly. And I believe you have many markets already that have some form of rehypothecation as collateral.
Okay, I'm gonna check because it was not the case when I'm
It's
trying
not the
to
most
use it.
popular on Morpho. Like
Yes, no.
usually what people, because rehypothecation frankly is not a good form of collateral. Like it's an illiquid one, and it's only good for the lending protocol usually, because it's like liquidity that can be reinvested somewhere else, like in the protocol. So it pumps the TVL, it pumps everything. But for example, if you think about ETH collateral, right? Would you rather have idle STETH, which is like just the only risk that you're taking is literally like the Lido smart contract and the staking yield, which is yielding 3.5, or the AWITH, which is the WITH deposit token of Aave, which has the risk management risk of Aave, which includes STEs plus all the smart contract risk of Aave, etc., for a lower yield, right? So replicated assets as collateral in general are just not good, right? Like for borrowers in general, and usually you have canonical like rehypothecation. For example, for if you want to use USD as collateral, use SDAI. SDAI is a very, very good collateral, or SUSDS. Right?
That's
If
true.
you want ETH as collateral, use STETH. It's yielding higher, it's more liquid than anything, right? And so, there is, like it's really only in the interest of the lending protocol to rehypothecate. So yeah.
Okay. At the moment, I would say Morpho is not earning many fees. I would say, it's
You're
more on curators. On some people are operating. So, what is your business for the long term regarding that?
So Morpho is generating zero fees. If there is a fee switch,
Yes.
it's
So,
not
sorry.
activated.
That's true.
Yeah.
That's true. Actually.
Vault managers have made a lot of money now. In total, they've made 23 millions in the last 9 months, right? So that's a decent amount of money.
That's not bad. That's not bad.
Yeah.
Okay.
And there are multiple reasons why we don't take fees currently. Maybe I shall first explain how we generate money if we wanted to.
Yes.
Is by
Please.
activating what we call the fee switch, which is essentially a cut of the interest rates that are being paid by borrowers to lenders, right? And so at every Morpho market, the Morpho protocol has the ability to take a cut, right? There are different implications to that. Like if you start taking a fee, well, if you're a vault manager, you're like, what value do you actually create? Like, can I just like take your code, copy it, and recreate the same, and essentially remove the fee, right? And so that us, the Morpho DAO, we don't benefit from it, and there is more value for vault managers. And so, in that regard, the code in DeFi is valueless. Like, code is a commodity, and the more we move into Web3, code will be all open source, all a commodity, and all SaaS business are going to die. That's my prediction. Like,
Okay.
is that
Okay.
everything will become a commodity, like at the software level.
Okay.
What is not
Are
a
you some
commodity?
sources from Uniswap maybe?
What, sorry?
No? Are you some in touch with some sources from Uniswap or some player like that? Maybe
Oh, yeah.
to bet to betting a huge bet like that?
You mean on code becoming a commodity for
Yes. Yes.
No, it's like a personal take.
Okay.
That I don't know, what Uniswap thinks about this, but I do think that as we move, like all servers on chain, like all the code will become open source, and if you want to keep up with innovation, you will have to be open source. Otherwise, you'll just like die essentially. And so, if we activate the fee switch in the Morpho license, the code turns open source, right? So it's a protected license, but if the Morpho DAO starts generating some revenue, it becomes open source instantly.
Okay.
So what that means is that anyone can, fork the Morpho code and remove the fee. And so we have to be able to justify why can we actually charge some revenue here? And the answer is not the code. The code is a commodity. The answer is the state, the liquidity that's in the protocol. Why
Okay.
would you build on the Morpho network? Because the Morpho network is stateful. If you're the lender, we have borrowers. If you're the borrower, we have lenders, right, on the other end. We have all this tooling around, like all the tooling and what's being built around Morpho is the value of the network, not the code itself, right? And this is why, if you start building on the Morpho, the Morpho stack, immediately you're going to generate some revenue, because some yield, because there is already lenders on the other side of the equation. While if you fork the code, it's stateless, right? You have to look for the borrowers and the lenders, right? So Morpho can generate revenue by taking a cut on the value that is created by the network effects, right, of the protocol.
Okay.
And we're not doing it right now because we believe the network can grow much further if we don't take fees. And we're not, currently Morpho is like 1.5 billion. We believe it can grow much, much, much bigger than this. That's number one. Number two is that we don't have regulatory clarity around how to take fees. And we're looking to have this a little bit. Like, I know many projects in DeFi don't care about this consideration, but we take this very seriously. Like, and so we are on the very conservative sides of DeFi protocols. And we're looking essentially to discuss with like the regulators, like what's the best way to approach like fee generation in a protocol.
What kind of regulators? If you can, in Europe, in United States, or only on
I can't
Europe.
share like specifically what are those
Oh,
conversations that we're having. But yeah, we're cautious about those things.
Okay. Recently, you announced a partnership with Binance Web3 wallet, so it's not directly with the platform, but it's Binance. So can you explain the logic behind this partnership? Okay, I'm going to be like more a devil advocate, I would say, but it's for farming, Morpho, to give access to the user to farm the protocol, but there is another thing behind this.
True. So currently Binance, has a earn, section where you can lend and borrow a lot of like different tokens. It's all centralized, and it's all managed by Binance behind the scenes, and does not scale very well, right? Because the more assets there is, the more risk management they have to do internally. It's very hard, And so it's very natural for them, especially as they build like wallets. They have this trust wallet, which is essentially the sort of spin-off, I think, wallet from Binance. And so they have all the account abstraction technology in order to have their main app users interact with DeFi. And so they're essentially letting users access to this sort of like offering of vaults that are on in DeFi, and letting their users earn some yields and different risk profiles, and yeah. So for them, it's just like a way to outsource, financial infrastructure.
Okay, but can we imagine multiplication of this type of partnership with centralized exchange in the future? It was my underlying question.
Yeah, you can imagine a lot of things.
Okay, as soon as possible, in a couple months, days. All right.
You can imagine what you want.
Okay. I'm a journalist, so imagination is not enough. But anyway, currently you are only deployed on a single layer 2, which Base. Why this choice only on Base?
Well,
because
for
there
us,
is okay, right now Base, it's a justification because Base right now is the biggest layer 2 by TVL, but at the time it was not when you choose to deploy it. So
that's a few things. So first of all, like Morpho's culture has always been around like focus. We do lending. We don't do stable coins. We don't do social media. We don't do like games. We don't do wallets. We do one thing, which is lending and borrowing. We take concentrated bets, right? And we put all our energy, all our resources into one objective, right? We don't try to do too many things at the same time. So for a long time, Ethereum, was a prime choice, right? Because we could aggregate and build here and just focus on that, right? And then over time, we realized that we were missing some, potential adoption just because layer 2s are offering a wide, range of new possibilities for end users because of gas fees, but also for large integration, large distribution partners that would want to abstract away the gas fees for their users. They can't, pay $30 of Ethereum gas fees for every single user that wants to perform an action.
Or just for a swap, or yeah.
Yeah, exactly right. So you have to be on a layer 2 for the quote unquote retail adoption, but most importantly, if you want big players to build very big integrations on top of Morpho, right? So that was part of the decision matrix on deploying into a layer 2. And then that's the main reason is that we needed the layer 2 for that.
Okay, it's not to have access, I will say, to the large base of customers from Coinbase, because when we talk with Jesse Pollack, it was an argument, to say that it's. I'm quoting Jesse Pollack. It's to put Coinbase on chain. We are seeing that there is some player like Infinex, and for me it's like inevitable to have, I would say. I don't know how to describe it, but like an IT or some real product on chain, and you still have your front end with the Coinbase, who is regulated, and you have the access to this infrastructure. Am I right, or are we aligned about this? Okay. I have a good imagination.
I agree with you that generally it feels pretty natural for exchanges to go on chain at some point, and not just exchanges, everybody, but starting with exchanges, because there are tech companies that are the closest to on-chain stuff, and as we said at the beginning, they have more and more infrastructure. Coinbase has the smart wallet, they have like the paymasters, they have all those dev kits that they use, like I believe they use internally, and also like is public for anyone to build on top. Like I can't say specifically what Coinbase is looking to do, but what I can share is like the market sentiment is like overall, and not just Coinbase, like many players are looking to go on chain, which is to me like a very exciting like time to be in building in DeFi, because for the very first time, I mean, I've not been here forever. Like I'm not like the Aaves of the world that have been here for like 8 years. I've only been here for 3 years, but I've never felt a sentiment like this, that we're actually going to bring DeFi to the mass adoption through like those big interfaces, essentially.
Okay. Let's talk about your token. So soon it's going to be released on the market, I would say. What was your logic to think around this token? Because you mentioned, okay, it's not possible to put some modification on the infrastructure. The vault is owned by a player or by a bunch of players. So, what will be the the utility of the DAO? I would
Right.
say.
Okay. So I'll share what's my original vision on how we should think about tokens, how I think about tokens. It does not engage the DAO. It does not engage, anyone else, because at the end of the day, like there are a bunch. Like if you go into the Morpho forum, like I am yet to catch up with everything. Like there's a bunch of players getting involved on how we're going to provide liquidity for Morpho, how the token should be launched, etc., etc. So the actual implementation, I don't know exactly how this is going to end up. Like genuinely. However, I can share with you what was my original intent. I mean, our original intent with the token and how we think about tokens in general. I believe for some reason, people have been looking for utility in tokens. The only reasonable reason I could think that people are have been looking for utility is just to try to circumvent or like to get away from regulations, right? Like if you think of tokens as equity, no one's gonna ask you what's the utility of your equity. It's equity, right? It's here to solve like the incentive problems of bringing investors early, contributors early,
It's
and
an incentive.
in the case in the case of tokens, you're going to also bring users early because those are programmable. But like I don't understand why tokens need to have a specific utility just beyond tweaking the incentives of the protocol in order to bootstrap it, right? To bootstrap the contributors, to bootstrap the investors, to bootstrap the users, and so that everyone can own a share of that network, right? And there is no use case for tokens, right? Except ETH, like almost 100% of the time. And I can't think of any use case where you'd better use your token to do something instead of another token like ETH, right? Or USDC. There's none. Like, and like I've debated like with many projects, like I'm not convinced by any form of token utility just beyond being like the ownership in the network. So the way I think of tokens is very minimal. It's the tokenization of the ownership in the network value. And the network value is created by bringing together the lenders and the borrowers, right? So it's a completely decentralized source of value, which stems from the state of the protocol. Multiple lenders coming together with multiple borrowers, and you're meeting the needs. The protocol helps meet the needs of those two actors being met, essentially. This creates value in a decentralized way, and the owners of the network are the one that control this value in order to further invest in the network, for example, to further finance it, this kind of things.
Okay, but what it will be possible to do with the token regarding the governance in the DAO? For example, if you can give one or two very simple example.
Yes. So, like the way what you can do currently with the token is the following. You can activate the fee switch and decide what, amount of fees are going to be taken by the protocol.
Okay.
And you could also decide what's the budget of the treasury. Like, you're going to say, okay, we're going to give this much to, the association, or we're going to give this grant to this builder, etc., etc. The way we think about it is like tokens should be everything should be as decentralized as possible, meaning that you use smart contracts when possible. Then you use incentives when possible. Like for example, what I mean by incentive is, for example, in the case of risk management, Aave uses token orders. In our case, it's a free market. Like it's decentralized, not through governance, but it's decentralized through the fact that it's a marketplace and anyone can build their own use case. I think tokens should be really the last resort where things get very, very, very political, like funding, for example, like how much do you take fees? And this is, the reason why you need you need the token to decentralize this choice, right? But to me, this is really restricted to a very small set of individuals, right?
Okay, and when it will be transferable?
I don't know. Like I like, those are active conversations in the forum. It's completely like under the decision of the community. On purpose, I don't get involved at all in those conversations. This is a launch that we, genuinely want to be like the most, decentralized possible. So we have received a lot of proposals on how to, launch the token, how liquidity should be market made on decentralized exchanges, this kind of things.
Okay. I have a couple more questions, especially around this term conservative. That's a category on Morpho right now. So can you explain why? Because you say that it's immutable. It's vault are owned by so a couple of things. So can you explain why there is now a category described like or called conservative?
Yeah, that's a good question. By the way, it was a feature that we tried for 3 days in the app. It's not anymore the case. It was removed, but I can explain what
Yes.
what that is or what that was. That was an experiment for us. Like, one of the feedback we got from users is, there are too many vaults. Like if you go to Aave, it's very easy. There is one option. On Morpho, you have multiple options. It's a much wider variety. You can choose whatever you want. But some people just don't want to choose, right? And so for us, it's a big trade-off. Like we want to be an infrastructure, we want to be an opinionated. So what we're showing is an explorer, right? Like we want people to explore and go through the vaults and decide by themselves, right? But this is a trade-off with user experience, right? Because now you have to select, you have to choose, etc. And so we tried because users asked for it to display, at the top what was like the most conservative vaults, right? And so we tried it, and then users complained, and so we removed it. At Morpho Labs, we like to iterate very fast on things. We try things. If it does not work, we just drop it, right? And so in that case, I believe that was not the best decision. So we decided to go back on it very quickly.
Okay, but what was the logic? The
logic is like providing, like a smoother, experience for the user, because now they don't have to think too much. If they want something that's very conservative from a risk perspective, they can just, select the first vaults that were in this table. But we did not get good feedback from that.
yes.
That said, we are working, so it's public now, so I can share it. We're working a complete revamp of the app of Morpho, which I believe is going to be the best UX like DeFi has ever seen, with like all the latest like account abstraction like technologies, and Morpho branded, etc. That's going to simplify drastically the way you interact with Morpho, and I believe it's going to be the best DeFi protocol out there to use.
And can you give us some, some features or some specific thing around this application? Because it was my couple of next question. Yes.
Sure. So from what I can tell, Morpho is aiming to let people bundle whatever they want in one click, right? So being able to perform very simple or very complex action, chaining the actions that you want without having to do more than one click for the transaction to be executed, right? And so this is something we've been aiming for this app. I think the day one of the launch of the app v2, you won't have exactly like one click, but over time it will be reduced to one click. And so I believe to that regard it's going to be a very competitive experience, that compared to any other like app that people have seen. I do think it's going to be an upgrade compared to like what we've seen in the space.
Okay, so through this application, it will be easier, because right now it's a little bit, I would say, more complex to choose. There is a bunch of things to choose. It's like, all right, so it's quite difficult when we are not familiar with traditional finance or financial at all or DeFi. So it's going to be easier through the new UX or application you're going to launch.
Easier for simple users, but if you want additional complexity, you'll be able to opt in to a lot of complexity if you want a lot of complexity, right?
Okay.
But only if you dive into the app and you enable the correct set of features, etc., etc.
Okay. I have a last question. It's a little bit outside of this topic, but it's still DeFi. What do you think about the move of Uniswap with Unichain? Can we imagine in the future, of course, Morpho like a Morpho chain compared to the Unichain? You know, the same way of
Right.
thinking.
Yeah. So I'll have to jump very soon, but just to answer to your question very quickly, I do think that Uniswap move is the correct one. Mostly, there are some things I don't agree or don't understand with, but like mostly Uniswap, if they want to build like the best trading experience, they want to reduce what we call loss versus rebalancing, which is also called LVR. And LVR is essentially a measure of like, how much, LPs are losing money, how much value is sort of like exiting from the system. And if you want to reduce that, you need to reduce the block time. So they need to accelerate the chain. They need to capture MEV, they need to reduce the gas. And if they want like a streamlined UX, you need to have like pre-confirmations and stuff like that. So the unit chain solves all of those UX problem extremely well, right? And so to that regard, I like it a lot. What I don't understand is the DeFi chain move. Like if you're building on the super chain, like with optimism and everything, I believe they should believe in interoperability of layer twos, in which case, why do they need to be a DeFi chain? Like, why is it general purpose? Like, I understand they have hooks and everything. In my mind, and again, maybe I don't have the full context, maybe I don't understand it, but my first glance is shouldn't have been general purpose except for hooks of Uniswap before. Other than that, I don't think I don't believe that. Maybe I'm wrong, and I'm happy to be proven, but I don't believe like the entire DeFi is going to be built on the Unichain. Like, this doesn't make sense for me.
Okay. Thanks, Paul, for your time. I remind the audience that we're going to focus on lending and borrowing the entire week. So we're going to have a really big focus and some good analysis around this topic in the big world. So don't hesitate to subscribe or to send some DM if you have any question. I wish you good luck as usual in this podcast, Paul, for your roadmap, and thanks again to have been with us in this big talk powered by the big well. Thank you.
Thank you.
And have a good day. Thank you.
Thank you.